Hey, I'm Mr. Roboto, back again with a September 23rd trade review. As always, we'll start with my QQQ thesis for the day, and then we'll go over the 3 trades I took. I took Tesla puts at open, and then I switched soon after and took Tesla calls, and then later on in the day I saw another opportunity to take Tesla calls. And then we'll do some reflection, mainly about how to adapt to what the market is telling you and how to flip when the market is telling you that you need to flip or you need to cut your position. So let's dive right in. So this is QQQ on the 1 hour. This is the action, the price action that we put in today. And this is the price action that we put in the day before. So as you can see, my thesis was that we were eventually going to test this 1 hour supply zone. It doesn't make sense to me for the price action from yesterday to essentially halt here and then turn back down without at least testing this level, and then more so the 1 hour supply zone that I had identified. So coming from here, I knew that there was room up and that it was very unlikely that we would just reverse from right at this point. If you study gaps and you watch gap fills, you'll notice that when it starts getting up to about 2/3 of the gap, it's unlikely that it reverses at that point. More often than not, it will fill in that gap. So that was my thesis. I was pretty bullish on today, and let's see what it ended up doing in the extended hours. And as you can see, let's go ahead and go to the 30-minute. As you can see, the price action already during extended hours started filling in this gap up here. And it got to about right here, which is in line with this 30-minute supply zone right here. So the fact that it pierced this 30-minute supply zone, I was pretty bullish on the day, but I knew what goes up must come down. Even if it is a bullish trend, it still needs to have pullbacks. Healthy pullbacks are what makes this market work. And I knew that if there was a pullback here, then it was a good chance that there was the price action for the indices would continue to rally to at least test this 1 hour supply. So why did I want to play puts at open? As you can see, I tweeted out at 9 o'clock, my general plan is to play puts at open unless the indices drop too far prior to open. And then I would be switching long soon after. Because I knew there was going to be a pullback in the indices. When I saw this, I knew there was going to be a pullback. Now, what I didn't want to happen was for the indices to pull back all the way into this demand zone. Like way earlier than market open. Because I knew that the market just needed to pull back into a demand zone and that it was going to rally from there. The ideal scenario for me was that the market would open right around here, and then I would play puts all the way down into this demand zone. And we were able to play that a little bit. So if you look at the 2-minute, the price action of QQQ did dip into this demand zone, and as you can see, it rallied from this demand zone, but we opened right around here. So this was a good opportunity for me. I knew that there was a good chance that the indices as well as the equities would fall back down and dip back into this demand zone where it would rally, do a final rally for the day. So this is why I said puts at open unless the indices drop too far. If the indices had opened right here, then the puts at open would have been out of question because I didn't think that the indices would drop below this demand zone. If the indices opened here, I'd be looking to play calls at open and bouncing out its demand zone. But it worked out to my plan. The indices opened around here, and I was able to play on this small dip right at open. So let's look at Tesla. I played puts on Tesla right at open. So right at open, I went ahead and entered a puts position. Literally like, this was literally right at open. I went ahead and took a starter position, and then it started going my way, but then it bounced all the way back up. And this was good because I was planning for this and I wanted Tesla to go back up so I can get cheaper prices on my puts and get a heavier position. So at this point, when it went down and then it ripped back up, let's see it on the 1 minute because it's easier to see on the 1 minute. So like I said, I took a starter position right at open, and then it went down a little bit, and then it ripped up. And this is where I took my full position on Tesla puts. And as you can see, there's a 30-minute supply zone here, and I knew as long as, one second. I knew as long as Tesla did not break this pre-market high and start testing this 1 hour supply, I was okay to buy puts. So I bought puts. I took my starter at open, and then it got to here, and I saw these upper wicks, and I took my full position on puts right here. I would have stopped out if Tesla started piercing this supply zone and was starting to look strong, and if Tesla broke this level, I would have been 100% out of my puts and I would have taken my loss. But that's not what ended up happening. The price action ended up playing out exactly to what I thought would happen, and Tesla dropped soon after, and I took all of my covers, or I sold all of my position right around here. It bounced a little bit, and I took my final scales out right here. Very quick move. I was in and out in probably less than 2.5 minutes, and it was a very good base hit trade for me. And following the plan that I wanted, that I had set out in the morning, was to play puts at open. And then the second part of my tweet, as you can see, I was looking to switch long soon after. And this was, again, a part of my thesis that QQQ was going to dip at open, and then from this demand zone, it was going to continue continue ripping and fill in this 1 hour supply. So I wanted to switch long on Tesla, and I did. Very soon after selling my puts, I went ahead and went long on Tesla. So right around here is where I went long. And I actually tweeted this out, or not tweeted this out, but in the GMT Discord channel, around 9:48, I said I was looking at Tesla long entry. So 9:48 was right around here on this dip. This is where I first got in, and I took a little bit more size here, because at this point, if you look at QQQ was absolutely ripping, and Tesla was lagging. But having played Tesla a lot, I knew that Tesla likes to sometimes lag the indices and likes to fake out a lot of people and likes to shake out a lot of paper hands before making a huge move. So I was very comfortable sitting and adding into this position. I was not at full size here, but when Tesla dipped back down, I did take full size right around here. Now I was sitting in this trade, and QQQ was still continuing to rip. Let's go ahead and pull QQQ right next to Tesla. as you can see, I'm sitting in this trade and QQQ is absolutely ripping. Tesla is lagging the indices at this point, but this is not unusual to me. I've seen Tesla do this. I've seen Tesla lag the indices, and then once the indices breaks new levels, Tesla all of a sudden catches up to the indices. And I think that's very the psychological aspect to that is that a lot of people like to play Tesla, and a lot of people like myself feel very comfortable buying into Tesla when it's weak, relatively weak to the indices, because we know once a lot of bulls see Tesla lagging, they too are going to want to get into that move and catch it before everyone else. So that's what I was looking to play today. I was in long. I was pretty full position, pretty heavy position. This was actually like my heaviest position in Tesla that I've taken. As you can see, I posted in GMT. This is my heaviest Tesla position to date. I had a lot of confidence here with NQ, which is the futures version of QQQ, breaking new highs. So seeing NQ doing this, breaking new highs, I was very confident in holding my Tesla position. But then the indices started dropping, and Tesla still had not made the move to catch up to the indices. And then also this wedge, this bear wedge pennant started forming, and I was starting to get shaken out of my position. So at this point, I was saying, I went ahead and started scaling out of my position. Again, this was my heaviest Tesla position. So I was, there's no way I'm not going to take 12% scales up here, especially since this was my heaviest Tesla position. So right around here, I started scaling out. And then again, Tesla was not doing the move that I wanted it to do. And then it started forming this head and shoulders. It might be hard to see, but you can see there's a shoulder here, the left shoulder. This is the head. And then this was potentially the right shoulder. It started rolling over to make the right shoulder. So when I saw that, despite having a lot of earlier conviction in this trade because of QQQ being very strong, I took a step back and I realized I was in too heavy of a trade for a trade that no longer was an A+ setup to me. At a certain point during this trade, I started hoping that Tesla would go back, actually break out. So anytime I start, hoping and praying in a trade, that's when I like to step back and look at it objectively, and try to see if my bias is actually playing against me. So that's what I did. I step back. I look at the larger time frame. As you can see, I looked at the larger time frame, and I all of a sudden said to myself, there's probably a good likelihood that Tesla goes down to this 30-minute demand zone, or at least this level, this 30-minute demand zone. Looking at this, it looked like at the time, it didn't look like this was a big enough dip or pullback for Tesla to continue making new highs. So when I realized that, coupled with the fact that it was starting to form a head and shoulders, coupled with the fact that QQQ was starting to go on a downtrend, all of a sudden my gut was telling me, all these bells are ringing off in my head that I needed to get out of my position because there was probably an impending knife coming. And that's exactly what ended up happening. So I went ahead and cut the rest of my position for 6% profit. I was really, when I entered this position and I chose to go as heavy as I did, I was really thinking that Tesla was going to rip up to here, and I was going to have probably my biggest win. But I was more than happy to exit this trade green and avoid this knife altogether. So right around here, as you can see, I said, she's not doing the move I want. I'll take my 10% here rather than risk going red on heavy size. I ended up saying that again. And then I ended up posting, once I get bad vibes about a trade, I cut it. I trust my pattern recognition enough, and it has saved me countless times. And then yes, I do get shaken out more often than others, but I rarely get caught in a knife. And again, I repeat, the minute you start hoping in a trade, it's time to take a step back and analyze it objectively. So that's what I ended up doing. I was able to avoid this knife. I was able to get out of this trade green. It was still a really good trade for me. Still made good profit on it. Not as much profit as I wanted if we would have made this move, but having been as heavy as I was, it was still a really good trade for me, even though I got out for 10% and 6% scales. And then after that, I didn't see much left in the market. There was a lot of stuff that was already ripping up, but everything was pretty much too overextended for me. I don't like to play overextension. I don't like to chase. I don't have FOMO to chase the day's runners. I like to buy pullbacks. And so there was not much left for me to do. I was pretty much sitting on hands. But later on in the day, I happened to see this forming on Tesla. I actually saw this on my phone, and I hopped back onto my computer to analyze this setup to see if this was actually a potential good setup that I wanted to trade. So I trade this often. This is a downward wedge break. Something breaks out of a demand zone, and then it pulls back. This is a natural pullback. Anything that rips up, you're going to have people who are selling and taking their profit. It's going to be a natural pullback. And a lot of times you can play this wedge break. That's exactly what I was looking to do when I hopped back onto my computer and took a position in this trade. So this is all on the 2-minute. You can see this a little bit better. I took my position here. I posted this in GMT. So I wanted to front run this position. I was fairly confident that this was going to break out. So I wanted to front run this position a little bit, and I took a starter size here. And then right as we started to break out, I went ahead and took my full size right here. I didn't hold this for too long. I did take some scales here, and I held a little bit, and then I saw this little dip here. This actually, I was debating re-adding right here, but instead I ended up I scaled out a little bit more right here. At this point, I was looking for a target. So I thought this target to me was too far away for the day. I didn't think Tesla was going to make it all the way back up to here. But I did see this 30 minutes supply zone right here using this green basing candle. So all of a sudden, this became my target. 757 was my target. And I thought that if Tesla went red to green on the day, that there would be a good chance they would rally to 757. Red to green meaning it opened and it went down, and it's forming a red daily candle on the day, but then it reclaims its opening level and it turns green on the day. A lot of times you can play a red to green move because a lot of times people will have those red to green moves on their scanner, and once something turns red to green on a day, they'll hop in and they'll play the breakout and play the pop. That's not really what Tesla ended up doing. It did end up getting stuffed at this level, but at the same time, I was still able to play this breakout really well. And this was another really good base hit. I did re-add, I believe it was right here. Well, let's go to the 2-minute. I'll pull up where I ended up re-adding. So this was my actual executions on the DOS platform. I bought here, took my full position here, took some scales here. I took some scales here where I thought I should re-add, but I ended up not re-adding. And then scaled out more. I believe it was like right around here. This is where I ended up scaling out more. And then I did end up re-adding right. So this is hard to, looks like I ended up re-adding right around here. And then I scaled out right here. So that was the end of the trade for me. I re-added here because I wanted to, I scaled out here, but I did want to see if it could make this 757 move. I started sensing some weakness, and then I just cut my position here. I didn't think it was worth the mental capital to just sit in this trade when I did sense some weakness. So that was it. This is my third trade. Another reason why I took this trade is because of volume price analysis. As you can see here, and I talked a little bit about this on my video yesterday, where I went over supply and demand along with volume price analysis and how you can use those two in conjunction to analyze whether or not you should enter a pullback. As you can see on the 15-minute time zone, this was the pullback. So we ripped and then we pulled back. And if you look at the volume in this pullback, very low volume compared to the buying volume that just came before it. Very low volume. Now, whenever I see this gives me confidence to enter this position because this is essentially just retail traders selling their position for profit. And this tells you that the institutions, the smart money, they're not in on this trade. They're not in on this selling. They're holding their position because they're waiting for a larger move. The smart money, the institutions, the market makers, they're not selling. This is retail selling their positions for tiny profit. So you want to be with the smart money. The smart money are riding this or holding on to their positions because they're expecting the price to continue going. So again, this is a low volume pullback. Whenever you see something like this, low volume preceded by higher volume, opposite volume, like with the buying volume, it's just one additional factor that gives me additional confidence in entering a trade. And that's it for me. Today was a very base hit day. I actually, didn't spend so much time in front of the computers. I saw that a lot of things had ripped already. I had missed a lot of runners this morning. I think BA had a really good day. Firm. There's a lot of tickers that ended up making big moves, and I missed all of them. But I'm okay because I don't FOMO in the trades. I don't chase, and I know I can make my base hits on better setups, more high probability setups, and setups that I know how to trade, and where I'm comfortable trading, and where I know I have an edge. So anytime you have FOMO, you see a lot of people in these trades and are making 100, 200, 300%. And if you're not in that move early, and you start chasing, sometimes you're going to make out really well, but more often than not, you're going to lose. So I don't FOMO into that stuff, and I practice discipline, and I wait for my setups to reveal themselves. So that's it for me. If you have any questions, again, my Twitter is open. Please follow me at Mr. Roboto Trades. My DMs are open. I've answering a bunch of questions from people. I enjoy doing that. And if you are on Discord, you can also look me up on Discord. And that's it for me. Hope everyone had a good trading day, and let's kill it again tomorrow. Thanks.